Everyone, welcome back to my channel. Today I have an exciting guest with me, Prad, the CEO from Skylight Health. Thanks so much for coming on.
Hey, great to be on, Landon.
Yeah, all right, so let's just start off. Can you tell my viewers a little bit about your company and what you're all about?
Yeah, for sure. So Skylight Health, we're a publicly traded company on the TSXV under SHG, and in the US on the QX under SHGFF. We're a US focused healthcare services company. We're providing primary care. We're technology enabled. Today we serve over 150,000 patients across 15 different states, soon to be 16. We have a massive opportunity as a business model here to be growing by way of acquisition as well as organic growth. Our market size in the US is obviously a multi-trillion-dollar industry where we think that there's just a ton of disruption, to be had in sort of the delivery of healthcare services. Look, we're a business that kind of grows through strategic acquisition, sort of buying practices at small to medium-sized businesses, very attractively priced, highly underutilized clinics. And we've got, over 20 years of experience in practice management, where we've got tried, tested, and true models where we bring, a ton of growth opportunities to these clinics, a lot of scale and synergy, but really kind of recognizing the real value in the patient base that exists within these practices. So certainly, strong growth story in the US market, just kind of starting off this year and looking forward to some pretty aggressive growth in 2021.
Mm-hmm. And what do those clinics look like? What kind of doctors and anything like that?
Yeah, so look, they're largely primary care. So they're family doctors. They're varying in sizes across the different states that we're in. So you got family doctors to nurse practitioners. Primary care is the main focus, although we do start to look at urgent care as part of the delivery model as well. And kind of what really makes this attractive long-term for the patients is as we continue to build on more primary care services, we want to start to bring in all those complementary services that patients would typically in any clinic right now be referred out for, right? And so if you think about it, you have to go see a specialist or 3 specialists. You're driving across 3 different offices in that region. We want to make it way more efficient. So we bring those specialists in-house. Patient just comes back to their family doctor, boom, boom, boom. They see all their patients, they see all the specialists, all the doctors, everything's easy, it's communicated. And also we can bring a lot of technology aspect to the business. And so sometimes these visits can be done virtually and remotely. And so we have our own proprietary telemedicine platform and technology. So making it far more convenient for the patient. But as an organization, the more services we offer, the more ability for us to recognize, more value from the kind of billings that come through on the insurable services side.
Yeah, for sure. Because if you can make it so you can bring the specialists and everything like that, then you can really make some more money out of that, and it's good for the company. Also, on January 7th, you announced that you went into a definitive agreement for acquiring the 6 clinics. How is that going?
Yeah, it's going really well. So we put sort of an outside date at the end of this first quarter for closing. My anticipation is we're probably going to do that sooner than that. So the process has been going really well. We've obviously done quite a bit of work on it so far, and there's always a little bit more to do, but we're pretty confident. We've made 6 announcements now over the last 4 months. The most recent announcement prior to this, which was the Florida transaction, which was set to close by the end of this month, is right on time as well. So we've been spot on with the last 5 acquisitions, and we believe the 6th one will pretty much fall under the same, same sort of commitment we've made so far.
So after closing this acquisition, how many clinics would you?
So we're counts over 30. I'd have to get the exact number for you, but I'd say high 30s for sure in terms of the number of locations. But we actually use better marker for us would be number of patients overall, right? Because one of the biggest the value driver for us is per patient, right? That's how we look at it. So unit economic that can be delivered on a per patient basis. So after closing the large transaction, we're probably looking at close to about 200,000 patients.
Wow.
Maybe even over. So it's substantially kind of gone up in the last 4 months. But where the real kind of opportunity exists is, where all these clinics right now, we're seeing their patients maybe, once a year, highly reactive, right? Think about it. Most doctors don't often call their patients ahead of time. They wait until they call them. You're sick, you need a note or something, a prescription. We have a more proactive approach, right? So we look at it and say, how many times should a patient be seen to be healthy, right? And where are those gaps in care? And so we go and say, okay, well, why aren't they coming in for their flu shot, or why aren't they coming in for their annual health checkup? And some of this can be done virtually too. So how do you go from 1 visit a year to 4 visits a year to 5 visits a year, right? And you think about, okay, you got 200,000 patients coming in once a year, where the average revenue per visit is $150. Well, now I want those 200,000 patients coming in 5 times a year, right? Because that's multiplied 5-fold on the revenue side, right? While making the patient healthier. So it's a do well by doing good kind of model. So yeah.
No, yeah, I like that, because sometimes a patient, I've heard of people who have underlying conditions and they have signs for it, but then they don't bother to go in, and then they kind of just like rub it off and then don't do anything. But if you can get a patient coming in and a doctor can see those kind of things and then refer them to a specialist, then you can protect your patient's health while also increasing the revenue. So it's like you said, it's a win-win scenario.
Yeah, absolutely.
Yeah, that's great. What are you looking forward to in 2021? Like, what are your goals?
Big growth. Big growth. I mean, look, we ended last year with a pipeline of deals that we committed to, right, in sort of the fall, and we were able to grow that from 10 million in deal flow to over 70 million in deal flow, right? And once we close the large transaction, that's almost half of that we brought in, right? And that 75 million today is well over 100 million or more. And so the continuous potential keeps increasing, and our size and scope of closing these transactions and doing well by them increase too. So I look at 2021 as kind of really a year for explosive growth, right? We set a lot of the foundation up last year. We proved a lot of the model out in the later part of last year, and now we're saying, look, that was call that a warm up, right? Now we're about to play, right? And 2021 is really kind of the first inning here. So there's a lot of growth to be had. There's a ton of upside to be realized. There's a lot of value in the past acquisitions to be recognized, and there's a lot more markets to penetrate. So the U.S. is a opportunistic market with a ton of potential, and in our perspective, not as much competition. And so, we're in a good place, and I think we're going to start to see some pretty good results this year.
Yeah. What would you say that your main difference is between you and other companies that are doing similar things?
So I mean, look, let's look at the markets, right? So there's other Canadian companies, I suppose, that are sort of doing something similar on the Canadian side, but the U.S. is a completely different market, right? I mean, we're talking sizable differences when it comes to scale and opportunity. So on the U.S. side, there aren't a lot of other public companies that are necessarily going after the same business model we are, and there's certainly other public companies that are in the U.S. healthcare services space, but they play within different markets, whether it's population demographic differences or business model differences. They're all uniquely different, right? So, our biggest competition can be, more private-based organizations, and that's a major advantage from our perspective, because one, we have access to a whole line of currency today that's not available to them and can often be cheaper than any kind of bank debt or leverage. And two, we've got an opportunity to provide public liquidity for founders and management that could be way more attractive than selling into another private company. And so I think you put those two together with an opportunity for a sector that's just got a lot of consolidation opportunity. I think you see where the value in that goes, kind of medium to long term.
Yeah. Because the U.S. market is pretty untouched for what you guys are doing right now. So I mean,
certainly by any Canadian player, right?
Yeah.
And U.S. companies have been in the U.S. market, but you're talking about such a massive market opportunity. It's not like you have under 10 locations that could really be maximized, right? It really is a massive market opportunity.
Yeah, and it's growing. So, so you guys just announced recently that you're going to be uplisting, or in the process of uplisting to the NASDAQ. So that does mean that you guys have to get to a $2 US stock price, and you have to be trading at that for more than 5 days. When do you think that you guys would be uplisting?
Yeah, so look, there's a bunch of considerations that go into this, and we wanted to be early to the game, right? So we filed the NASDAQ application. We're communicating our intention. We're being fully transparent that this is the market we want to go to, largely because we feel like there's an entire opportunity for real institutional buying to happen that today, we've done before we did this, we did a lot of testing the waters, right? So we've been around the street a number of times. We've met with a number of US institutions, and there's been a lot of demand and interest, but problem is they can't deploy because they won't buy on the bulletin board or on the Canadian exchange. So the good news is there's a lot of demand. And so that means a NASDAQ exchange would lead to that. That being said, there's a lot of time between now and the time we want to do it, right? And so, we're going to play it accordingly. And we've got a busy month of February with, many meetings that continue to happen, and the demand continues to open up more opportunities. So look, there'll be continued opportunities to drive more buying, which will ultimately reflect. But let's also not recognize, I think, there's been some near-term opportunities within the last few acquisitions we've made. I mean, as we look to close these transactions, the company has a chance to re-rate back to fair market multiples, which based on that alone will get us close to that price target, if not more, right? So I think there's a number of catalysts that can catch up to itself, but there's certainly a lot more news flow to come that'll help drive some of those catalysts forward as well. So,
because fully diluted, what is your market cap right now?
Close to about 300 million, I would say.
Okay. Yeah. And then what was your revenue last quarter?
I mean, when we exited 2020, I'd say fair market, let's use the word fair market value, right? Not market comp, because market comp would mean we're still undervalued, but fair market value would be about 6 to 7 times or 7 to 8 times forward-looking revenue, right? Now with these announced acquisitions, and once we close it, we're sitting at about a $46 million annual run rate with profitability. And so when you look at that multiple applied here on its basis alone gets you to that target price point.
Yeah.
We're probably down to about a 4 to 5 times multiple currently based on that expected run rate. So call that the ability to close the gap back to fair market value is the easiest way to close that gap to the price we need. But again, that would mean that we're not doing anything else, which is never the case here at Skylight.
Yeah. I mean, you guys have huge growth ahead and still pretty undervalued for the aspects of the multiples that are in the market.
Yeah, and look, I think we're getting more recognition for it. And I think as we start to see more coverage and more research, and we certainly expect to see it more on the US and Canada side, it's all going to lead to more opportunities for investors to get aware of the story.
Yeah, and you also just got a new board of director, Grace, onto the board, and she seems that
she's excellent. Yeah, she's phenomenal. We're lucky to have her. She comes across from all aspects, right? U.S. experience, banking, finance, public market experience on the U.S. big board exchanges, and she's
CFO of a big company. Yeah,
exactly.
And graduated from Harvard, so
resume and experience both. Yeah,
terrific. It's good to have a good management team. That's something that I always look at when I'm looking at these companies, and high growth, and you guys mark all of that.
Yeah, so, look, we're founder led, right? So opportunity for us to still maintain the culture the way it was from 2 founders sitting across in a small 300 square foot office to where the business is at today. And largely, look, I'll say the board also works very similar to management, right? Good culture, good dynamic, very supportive, which is what you want.
Yeah, that's so true.
Yeah.
All right, so that's it for my questions. Thanks so much for coming on today.
Yeah, no, thanks for having me. It was a great conversation, and have a good weekend.
Yeah, hope to talk to you soon. Thanks so much.
Yeah, take care.